Well, we are here with Justin Donald, who I am super excited to connect with. Justin, thanks for being here.
Hey, Mike, I'm so excited to be here. This is going to be a lot of fun. I enjoyed our commentary kind of off mic and off air, and I'm excited to really dive into some fun stuff.
Awesome. So, for those who don't know of Justin, Entrepreneur Magazine calls Justin the new Warren Buffett. And I remember one quote one person was speaking about you is that how you turn everything into gold, it seems like. And you've obviously done incredibly well for yourself, earning millions of dollars through your investing in hundreds of businesses that you've impacted. And you're still fairly young. I think you have a shot of really becoming that new Warren Buffett. But if I take a step back, it didn't always used to be that way. Can you walk us through a little bit of your journey, especially early on?
Yeah, sure, I'd love to. And it's a very kind compliment to be paid by Entrepreneur Magazine comparing me to Warren Buffett. But for the record, Warren Buffett's in a league of his own. I just had the privilege of going to Berkshire Hathaway's annual meeting this year and getting a chance to see this 93-year-old guy with his 99-year-old partner run an 8-hour meeting with a lunch break. And just literally, they were there talking the whole time. It was really impressive. So
Wow.
if I can have any comparison to him, I think that's great. I feel like I'm living at, if I can ever get to 1/100th of Warren Buffett, I'm going to be a happy camper. But that said, early in my investment career, I definitely made a lot of mistakes. Early in my entrepreneurship career, I made a lot of mistakes. And so today, there's a little bit more of a finished product, though I don't know that, any of us are ever a finished product, but I'm a little more polished than I was earlier on. And the scars, the bumps, the bruises have kind of helped define and create the path that I'm on today, and have wizened me up a little bit. But yeah, I mean, if you go way back, it's funny. I was looking through old, like middle school, high school directories, and just seeing the messages that people wrote you and wrote them. I don't know if that was a thing at your school.
Yeah.
So, I
Those
mean,
are fun.
yeah. So going back, even to elementary school, I had some entries where I said I wanted to be a businessman. Right. So
Mm.
no one really used the word entrepreneur back then, but yeah, I said I wanted to have my own business. And this was a constant theme through elementary school, middle school, high school. And so it's interesting seeing it play out with, even in the simplest form of like in college, I went to the business school at the University of Illinois, and I took a whole bunch of really cool classes that were taught by adjunct professors that specialized in investing and specialized in wealth building and wealth creation. And back then, University of Illinois was known for having a top 20 business program in the country. And so it was very evident in the people that they brought in, where, you had one professor teaching arbitrage strategy. And if you brought a deal that he did, he would front the money and split the profits with you 50-50.
Well, that's incredible. That's
Right.
fun.
Isn't that neat? And like other, professors that would do deals with you. And so like we managed $1 million of one of our alumni's money in a class where they basically selected, the 20 top students, or 20 students that they thought would perform well building a portfolio in public equities. And so that was a really cool experience as a college senior, to manage $1 million and to actually make money in a non-favorable economic time frame, right?
Was that a bit terrifying to be managing that much money?
Oh, it certainly was. It certainly was. And no one wants to be responsible for losing an alumni, hundreds of thousands or maybe $1 million. I mean, it was nerve-wracking, but it was cool. But at the same time, if you wanted to do something, you had to sell the class, the other 19 students, on why we should buy or why we should sell. It was a really cool experience.
That's awesome. So you kind of get through college, you're learning, you're taking a journey that a lot of people take, learning these business classes, this insight from your adjunct professors. But at some point you graduate and you start entering the normal world. Where did you go next?
Well, I had the opportunity. It's interesting because I thought I was going to be an investment banker. I mean, that was the
Huh.
path I was on. I had people say, "Hey, you should, maybe you should get into financial planning." I never really wanted to get into financial planning, but I thought I might, trade stocks and do some stuff on Wall Street. And that quickly changed once I got the taste of entrepreneurship and running an
Mm.
office, running a business. So during college, I sold Cutco. That's how I paid for college. And during my junior and senior year, I had the opportunity to run my own office under their umbrella. And it was a summer internship. I, put up a bunch of cash myself, I think $10,000. The
Wow.
company put up some cash, and I was just in the town I grew up in, running a business that I don't know had ever. I mean, I don't think they'd ever had a successful office there. And my goal was to be the first person to kind of build a successful team. And so through the course of that summer, I had the experience of hiring and training, receptionist staff and sales representatives, and doing ongoing manager development and rep development. And it was just such a surreal experience. We ended up having a couple of the top representatives in the nation from our office, and did really well. So it was a big confidence boost for me. But really what happened there is I got this feel for entrepreneurship, and hey, I wonder if maybe I should run a business instead of go to Wall Street. Maybe that's what I should do.
That's
And
a that's a big shift.
it
What
is.
what do you think? So in this college business, you're putting $10,000 down, which is also incredible for me, a college student. But what do you think made you successful during that little stint with that business?
Well, I'm pretty competitive, and I've never been afraid of work ethic. I was in all kinds of sports growing up, so I've always been comfortable, just kind of playing full out. And
Mm.
I think I could outwork anyone, especially at that age. I felt like I could outwork anyone, and so I did probably outwork most of the people.
How many hours were you putting at that time?
I put in a lot. I mean, I was probably somewhere between 80 and 100 hours a week for
Wow.
that summer. Yeah,
So this was your life during that time period.
it
Was it
was.
sustainable or was that
Oh,
kind of,
definitely not sustainable. But I think in like waves, for a
yeah.
long time, I did that with the company over summers, which were the biggest time frame, and then I would just kind of ease up the rest of the year. So, for basically 3.5 months, I would put the pedal to the metal and see what I could do, and along the way get smarter about putting people in place and putting systems in place. But at the beginning, it was just me. I
Hmm.
didn't have anyone else, so I didn't have the luxury of systems or people. So but I had fun doing it. It was rewarding. I was developing people. I was developing like deep rooted friendships as I'm
Hmm.
helping these young individuals. And I was young at the time. They were just a little younger than me. But these young individuals kind of better their skills, and earn a great income, and just kind of show up in a more confident manner than how they originally walked into my office doors.
I love that. Starting to coach, develop them so you can leverage more of your time so you can be more effective.
That's right.
So you said at the end of college, you started shifting away from this world of Wall Street, which has an allure to it, to becoming an entrepreneur. How did you make that entrepreneur dream real for yourself after college?
Well, it was really funny because when I first went to college, I don't know what I was thinking, but my freshman year, I was like, I think I'm going to become, I don't know what I want to do in business, but I think I want to become an accountant. And I'm not built to be an accountant. So it's actually really funny. I mean, I feel like my family had to have been like, Justin, are you sure that's what you want to do? But then again, I was the first person in my family to graduate from college in general.
Mm.
So I think they were just happy I was there, and they're like, "Hey, if you want to be an accountant, be an accountant." But I learned really fast. I was not built for that, and I had to I had to pivot, and I found finance to be a lot more my speed, and just it was more fun for me. So yeah, big pivot there in terms of like studies and curriculum. But then big pivot upon graduating, I had some pretty good job offers. I mean, I could have gone with, some bigger companies, and I decided that I should continue with Cutco and just see what I could do if I, kept running my own business. Maybe I could get a bigger territory, build a bigger team, and it's neat because in this model, where you run your own business, you are an entrepreneur. You don't have to take care of fulfillment, which is really nice. But you take care of most everything else. So it's a great starter for becoming an entrepreneur where you don't have to do 100% of everything, but you're probably doing 75% of it.
Yeah. Well, how long were you with Cutco then?
Well, counting my college years, I ended up working with Cutco for, 17, 18 years, something like
Oh,
that.
wow.
Yeah,
Okay,
so
well
it's
let's
a long
dive
period
into
of
that
time.
then. So you start off with you're doing most of the work yourself. You're slowly making this transition of hiring young people and coaching, developing them. Walk me through, what was that journey like? What were some of the road bumps you hit and how did you overcome them?
Well, there were definitely seasons of the business, seasons where it was stronger and seasons where it wasn't as strong, seasons where I developed a team that was, that had managerial skills, and seasons where I wasn't yet good at developing people, and
Mm,
realizing that at a certain point in time, the only way I can scale myself out of a business is with systems and people, and that basically I'm on this hamster wheel doing the same darn thing every single year. But it's kind of like college sports in the fact that your best people are always graduating, right? They're always moving on to the next thing. So it's not like you're building a team that stays for a long time. You're always having to recruit fresh new talent. And that can become very tiresome, cumbersome. It takes a lot of energy. So I knew early on that I needed to become good with systems. That the systems could be the primary focus, and if I get the right people that can be trained on those systems, then we're going to do great. If I'm always relying on people's personality, well, then we're probably going to fluctuate a lot more in sales and recruiting and retention. But if I am system oriented, then it's more plug and play with people, and you just have to have the right training program. And so I kind of learned that along the way through, highs and lows of business results, and ended up developing a lot of the systems and a lot of the scripting and programs that Cutco uses today.
that's incredible. What kind of systems? Give us an example of one of the systems you created and why you needed to create it and what was the result of that?
Well, a lot of, first and foremost, I think the more data you collect, the better you're going to be in any business. Once you can figure out what's important, what's trackable, what's influenceable. For me, I just went on this big tirade of like, we need to know every number. We need to track it. We need to look at it daily. We have some daily markers, some weekly markers, some monthly markers. And so just, implementing some metrics into the business, some measurement, that was huge. But then also figuring out that there were managers that we could just get to specialize in certain roles. So instead of having someone come in and do everything, all right, let's get, an admin manager, and here's the admin checklist. Here's all the things that they need to do on a daily and weekly basis. Here's what, an interviewing manager needs to know. Here's what a training manager needs to know. Here's what a field training manager needs to know. Here's what a retention manager needs to know. And so just kind of building out roles and building out, SOPs that can be followed. So let's say someone doesn't work out, mid busy season. You can let them go and bring in the new person in a pretty seamless manner if you have that infrastructure in place. If you don't, it's a train wreck. And by the way, I lived through many train wrecks. I lived through the seasons where there was no one to do it, and I didn't have a backup plan, and so I ended up doing it, and I had too much on my plate, so it didn't end up going well.
Well, let's hear about some of those train wrecks. Maybe that one in particular. Want to give us some details?
Well, early on, I think I was pretty hard on my staff. I expected them to work as hard as I worked,
Mm,
but not for the same compensation, So some people were in it for the love of the game, and I had developed great relationships, and people wanted to win with me and for me. And other times where the team maybe didn't gel the same way, or we weren't hitting our numbers, we were behind schedule. It doesn't feel as good as maybe the seasons where you're crushing it and you're exceeding expectations and things seem effortless. Well, when things are going well, people generally stick around. When they're not going well, they don't. And so I learned early on, if I can't figure out a way to get business quickly in a new season with a new staff, there's going to be a lot of turnover because they're not going to make money for a while. You have to ramp it up. And so even setting that expectation was huge, that, hey, the first month is going to be your lowest income month. Your second month is going to be your second lowest. Your third month is going to be your biggest. And your fourth month is going to be your second biggest. And so just even creating the framework and the understanding of here's what it's going to look like, you can help people weather the storm. But I did not do that early on. I hired the wrong people early on. I didn't use personality and behavioral assessments early on. I mean, these are all things I shifted to later, but I mean, we definitely learned how to hire the right people by hiring plenty of the wrong people.
Man, I think you hit on something that, at least to me, is the most important thing that we do is focus on finding the very best people. And that changes the game for everyone. What are some of the techniques that you've learned through that experience to find and attract the best people?
Well, I think so. There's kind of like two schools of thought on, kind of business management. And a lot of people subscribe to this whole micromanagement philosophy. Like, I'm going to be, in your business and managing the details every single day, almost, helicopter parent-esque. And that just isn't my style. It's never been my style. I had many leaders that tried to manage me that way, and it did not work well for me. And so, I just value autonomy and freedom and being able to do things my own way. And by the way, I'm okay if it doesn't go great, but sometimes I just need to learn that, and I can innovate better, or I can problem solve better when I'm allowed to do it in a way that feels right to me. And so I try to give that space. So the other side of the coin is that macro management, where I decided, hey, I'm going to hire the best and the brightest. And this is for many businesses. This is not just for, the Cutco operation, but early on it was that, hey, I will pay higher, and, I'll pay more money for great people. These great people need to have some drive. They need to, really have for the love of the game and kind of like a team mentality. And I have to be able to trust them. But if they have drive, and if they're hungry, and if they're coachable, that's who I want, because I don't have to manage them every day. They will have a certain standard that they feel like they have to hold themselves to. And I just learned you pay more for better people, and those better people almost always outperform. And so you can have a much, what I think is healthier culture, because you can let people step into their own element. You can give them permission to make mistakes and learn from it and coach them through it, versus managing them so tightly that they don't get to make those mistakes. Or if they do, you kind of blow up on them, right?
Mhm. You are speaking my language. I love that. We often look, and a lot of people think it's expensive to hire the best. And certainly on a per person basis, it's expensive. But what most people fail to understand is the best people well outperform the average. I've seen it as much as 2 to 5 to even 10 times as much, depending on the role. So instead, if you look at it as a cost per unit produced, the best people are actually your least expensive. And they're the ones who help create the culture and the environment that's attractive to so many others. So I love that you've lived out that lesson. Walk me through a little bit about the success you had with Cutco. Where did you start and where did you end up with that business?
Well, I started as a sales representative who didn't really know how to sell kitchen cutlery. Previously, I had a job where in seventh grade, I signed up to sell newspaper subscriptions door to door, which sounds really crazy. I don't know that that would be something that would fly today, but I would just get dropped off in random neighborhoods and I would go door knocking and try and talk people into buying newspaper subscriptions for all different types of papers. And I was horrible at first, like just brutally awful. I took everything personally. Almost everyone said no. I mean, at the beginning, everyone said no. This was a purely commission job. So my first few paychecks were $0. I was working for free. And so I learned really fast that I need to grow some thicker skin. I need to learn how to handle objections. I need to recognize that people are saying no to what I'm offering, not no to me. And I need to change up my offerings to get them to say yes. And so that was very pivotal because I did that all through middle school and high school. And I eventually got good at it, eventually built all the scripts for that company and trained all the new people coming in. And then my senior year of high school, I drove my own crew around. Actually, I may have started my, did I start that? Either end of my junior year or my senior year, I had my own crew of kids that I took around. And I made money off of each subscription they sold, which was pretty cool. So what ended up happening there is when I moved over to Cutco, I already had a foundation of sales, but I didn't know how to sell cutlery. But luckily, the product line for Cutco is really world class. And so I just had to learn, the language of cooking and chopping and, what the different products do and why there's value in each product. And I eventually got pretty good at that fast and became one of the top selling representatives, and as a manager became one of the top managers. And at the time that I hit Hall of Fame with the company, I think I was the fastest to have ever hit that. So there are certain milestones that once your organization hits, however many millions of dollars, you are officially their Hall of Fame. So within 3 years of being a manager, I had hit Hall of Fame, which I think was I don't know
Wow.
that anyone
Nice.
expected that,
Yeah.
including myself.
So you started there. Where did Cutco end up after the 15, 17 years that you were there?
So what I did over time is I started phasing my role out of that business and kind of building and scaling the team around me and building that infrastructure so that way I could start getting into other things. So I started another business during that time frame, a single family home maintenance company that ended up taking off. We started doing work for a lot of the institutional owners of single family homes, and actually the largest ownership groups in the US. And so it was pretty powerful to, be three people, three co-founders, friends sitting around a kitchen table in a home in Highland Park, working on this business and finding proof of concept. When this business, by the way, we only started this business to make money to do this other business we wanted to do. We wanted to create a marketplace of salespeople. And so we needed the money. We found someone that was going to build out this website. And we said, okay, well, how do we make the money? Because this is going to be expensive. It was going to be like $100,000 to $200,000. And it was money that we didn't have. So we said, well, there might be an opportunity over here in this business. Why don't we make the money over here? And then we'll come over and kind of build out this sales platform. But the single family home maintenance business took off, and that became the primary business, which was really cool. And
Well, so what's the mindset going on there? I mean, you wanted to be an entrepreneur. You built up a successful business with Cutco, probably making a decent amount of money on there, but you were still hungry, right? You wanted to tackle something new. What's going through your mind in adding more to your plate?
well, part of it was I needed something new. I had been
Mm.
doing the same thing for a long time. I felt like I needed to grow. I needed to get out of my comfort zone. Cutco was super comfortable for me. I had performed as a top manager virtually every year that I was there. So I did not feel challenged the way I did earlier in my career. And I didn't feel like I had leaders that, were kind of at a high enough level or I kind of felt like I caught up to my leaders. Maybe that's a better way of
Mm,
saying it. And not in
yeah.
a bad way. Like I mean, I have dear friends that are in that business, but I felt like I needed someone that was going to help take me to the next level. And I didn't see it coming from that organization. And so I felt like, I need to kind of start pivoting and doing my own thing. And so I actually pivoted in two directions. One was to start this company, and the other was to invest. So I figure I probably need to have something that I'm actively working on. And then I want to have something where I have passive income coming in. And I want that passive income to make it so I don't have to work. I only choose to work. Like I get to work. It's a big shift from having to work to getting to work, because then you can work on your time frame. You can work on the projects that give you the most, joy and challenge. And so that was it. I started investing in mobile home parks, um, and that kind of created the space and the freedom from an income standpoint. I bought a park that replaced my wife's income, so she retired as a teacher, and then I bought another park that started our survival, or covered our survival income, and then I bought another one that covered our lifestyle income. And so that was kind of the three park progression. And once that was covered, then I felt like, well, I can leave and do anything I need to do. And that's really where I had the confidence that even if I outsource everything in Cutco and it blows up in not a good way, I still am fine financially, and I can still challenge myself over here with this new business.
I love that. I think I want to dive into this a little bit more because, at least from a third party perspective, it seems to me like this is sort of a key moment of your life where you go from just working in business and realizing deeper down that you want something different out of life. What was your life before this transition period, and what was going through your mind to spawn this change?
Well, I also knew that my wife and I were going to have our daughter soon.
Mm,
And so, I knew that I wanted to make sure that I had all the time available to not miss anything, any performance, any
yeah.
sporting event, any recital. And so I knew I needed to buy my time back. I also recognized that there are seasons in life where I was willing to work hard, and some of those seasons, happened where I worked really hard over the weekends, and my friends were going out and I wasn't going out, and I was at the office at 10 p.m. on a Friday night. And so, in some of those moments I said, this is okay for right now, but this is not okay when I have a family. And so I either need to build the system that removes me where it still operates at as high of a level or a higher level, or I need to transition out
Mm.
and get something that is less dependent on me and my time. And so I opted to do both strategies. Let's put the infrastructure in place just in case that works, and let's start investing in passive income, so that way I'm covered, all the way around.
Was this like a slow transition that was happening in your mind with time? You just became more and more like, I need to make a change? Or was there some like key moment that like shifted your perspective?
Well, you could say over time, little by little, I was kind of pivoting in that direction. I mean, I think that there
Mm,
was kind of a breaking point one time where I was still in the office late on a Friday night, and I said no to my friends going out so that I could finish up work in this, busier season, feeling like, you know what, I don't know if I want to be here. In the past, I actually wanted to be here because it was fun and it was new and it was exciting, but now it's not as fun and new and exciting. And now I'm just here, and it feels like I don't own this business. This business owns me. And so that, when you lose that autonomy, for me at least, it really like motivated me to figure out the solution so that I don't have to live in that place with those emotions, with what I felt like this business hanging over my head was. It's like the business has me trapped. Yeah, I make a good income. I'm not complaining about the income, but I would take less income to not have the pressure, to not have the responsibility, right? And so
mhm.
I knew that I had to do it different. I knew, and by the way, it's not that what I did was bad. It's that I was in a new season of life, and what I had done got me to a level where I was able to think more clearly and think higher level and think longer term. So like I'm thankful for that season, thankful for that experience because it helped define who I am, and it also motivated me to kind of get out of my own way.
One thing I love is you started making this change to focus more on investing. You're kind of taking a few different routes at this point. But I think one of the things you're doing right at this stage of your life that's just genius is you're better utilizing your time to more directly achieve the goal and the dream that you have for your life. What was that goal and dream, and what actions did you take to make that a reality for yourself?
Well, I knew that I wanted to have total financial freedom because if I had that, then I could literally pursue my passions 24/7.
Mm.
And that just felt so in alignment with who I am and where I wanted to go. It's not that I wouldn't work. I like working when it's things that inspire me. So I don't want to stop working. There may be seasons where I need a break from working. There may be seasons of sabbatical. You know, when I took a year off and didn't work, that was one of the most healing and therapeutic seasons of my life. And we traveled the world as a family, and it was absolutely incredible. Went to 13 different countries and laughed and learned and loved. It was just a magical season of life. And so I think that that was important and helped, define the next chapter and season of my life and define who I wanted to be and how I wanted to show up in the world. But, I had to kind of create that space and create that clarity. And I think for most of my earlier entrepreneurial years, I was just on autopilot. I mean, I was just putting out fires. I was just going from thing to thing to thing to thing to thing to thing. And then I would finally take a breath at the end of the day. And that's like reactionary living. That's not
Mm.
proactive. That's not life by design. That's not being intentional. And I knew I had to pivot. And the other thing that started to creep in is I felt like I would tell people I was a family man. Like it was important that I was a family man
Mm.
and a family man first and a businessman second. I'm part of this group called Front Row Dads. And that's one of the mantras there. But and in my head, I had convinced like myself that yes, that is the case. But I had someone kind of call me out when we were looking through my schedule, and they're like, "Yeah, your schedule's the greatest indicator of your priorities." And I was like, "Oh my goodness, I plan business first and family second, and I don't want that." So I had this shift where I said, all right, no more of that. Family, let me just plug in the family time and I'm going to do the business after that. And that was revolutionary for me and for what I wanted and for our family unit and just the cohesiveness and the family brand that we've been able to create.
It's really amazing. A lot of people talk about wanting to have that kind of lifestyle and experience, being able to take a year off to tour the world. That's really phenomenal. But most people can never get there, right? There's some magic that you took and some actions that you've taken to make that a reality. What are those actions?
Well, I had to get out of my own way. I had to stop letting my ego drive, the ship,
Mm.
because if I cared so much about my position or my status or my title or moving up the corporate ladder, that I mean, we can justify how that's good for the family, but it's really good for me or for you or for us first, right?
Yeah.
My wife is so good in so many ways about like just um, seeing the world differently than me and having a discerning eye. And she'll often say, "You said that's for the family, but are you sure that's for the family or is that for you?" Right? And it's, it's a wake up call. It's like, oh, I guess you're right. I kind of justified that it was for the family, but no, it was actually for me because the family doesn't really need that, or the family's fine whether we have that or not. So it's not like she would always, I'd say like, well, I'm working hard. I'm making more money for the family. She's like, well, does the family really need more money? I feel like we're pretty good where we are and we live a great life. And it's like little conversations
Mm.
like that, little lessons like that I'm able to learn. Yeah. So
So firstly, it's about mindset. It's about having that right kind of mindset, which I could not agree more with. But walk us through some of the details. What actions did you actually take to make yourself financially independent? So I know part of it's investing, right? This is your whole world today.
Yeah. So, I mean, I do spend most of my time, basically investing or teaching people to invest. I love this world. I still love the world of entrepreneurship, but I'm a teacher at heart.
Mm,
And so I like to teach people how to, you know, so at one point in my life, I taught people how to scale their company or how to bring in executives and replace themselves or how to recruit more people or whatever it is, a comp structure. I mean, I did all kinds of consulting and advisory around business growth, that whole process. And that became a little old and a little stale. And at a certain point, I coached people on how to buy mobile home parks because that was my uh, path to financial freedom. But that kind of
mm.
also became a little more boring and stale for me. And then I felt like, well, why don't I just teach people about how to buy their time back? Like it could be any asset. It doesn't have to be mobile home parks, but mobile home parks are great. What a great way to do it. But it's one of many. I could teach people how to buy small businesses like I had done. I could teach people how to buy other assets. I could teach people to invest in syndications where they don't own deeded property, but they're investing with other very smart, successful individuals. And so I just had this epiphany that I wanted to help people grow their wealth by buying their time back first and living a life by design that is inspiring to them. And that way they can show up inspired with their family.
Yeah. You know, one thing that always drives me nuts with quote unquote gurus out there is that they kind of fake it till they make it and they pretend to be the guru and then they are because they've pretended long enough. Where you've taken a totally different approach. You lived the life incredibly well. And so that you can actually share people that insight. Tell me more about that.
Well, I think that's a great point, and I try and tell people all the time, since everyone today is a life coach, apparently, whether they have the life experience or not. And I always say you got to be careful who you trust because there are a lot of people out there that haven't done the thing that you say you want to do. And I think it's really important if you want to do something, if you want to become like top performing in an area, then hire best in class for whatever that area is because they have a proven track record and copy their programs and their systems and you can take shortcuts because you're taking their uh like proven path, right? So it's not that you're shortcutting. I mean, you're shortcutting the result because you're taking away the trial and error and just going with a proven method. And so to me, it's just smart and it's efficient. But with so many people out there that they don't know what they're talking about, but they're willing to take money to teach people, things that they think they know or that they want to know, I think it's dangerous. So yeah, I think you hire best in class. I think you get around a peer group that is aspiring to or already is doing the things you want to do. And that could be anything. For me, in a season of life that I was in, it was wealth creation. It was
Mm.
passive income. It was tax strategy. It was getting around the best and the brightest minds. So yeah, for me, I don't feel like I could ever teach something unless I could call myself an expert or at least have, 10,000 hours or the equivalent of 10 years in something. Like I want to know that I at least have, a level of expertise in the thing that I'm teaching. Otherwise, I don't think I have any business teaching it.
Oh yeah, I could not agree more. I love learning from experts and the top people in the world, but there's such a huge difference between the expert, the best in class that you talked about, versus again the average kind of consultant. We had a expert with concrete and mixing and putting different kinds of mixtures together for concrete. He could make concrete clean itself. It was incredible to see the technology he put together, but only the best in the world could understand those kinds of nuances. And so I think it's so important, just like you said, to learn from the truly best. Now, you've made this lifestyle for yourself. You've went from having a couple of trailer home parks to growing to, I think you've got 300 different businesses you've been invested in some way, shape, or form. Tell us about that story.
Well, what ended up happening, at the beginning, I had no passive income. And I said, how can I retire, or how can I pivot doing what I'm doing safely if I don't have passive income? I mean, I
Mm,
guess I could take the big leap where I could just leave and pivot and do something else. And there are, some people that do that successfully, and there are people that do that and fail miserably. I just didn't want to. I was at a point in life where I had more than just myself to worry about. If it were just me, I could have probably jumped ship and pivoted and started the next thing. But at this point I had a family. And so my goal was, how can I transition without changing our lifestyle at all? And so I just saw that as, hey, I got to get my passive income up to a certain level. I got to get to this survival income first. I got to get to lifestyle income next. And then ultimately I need to replace my active income. And so those are kind of like my three tiers that I work towards, and they all happened pretty quickly because I was committed to it. But the problem originally of having no passive income became a new problem in just a few years, which was I had too much passive income that I didn't know what to do. Like, I had cash coming in and I wasn't sure where to allocate it. And if I kept doing the same thing that I was doing, it would exacerbate the problem of cash. So
mm,
I had to actually figure out, okay, well, should I be diversifying? Most people make their wealth from a concentrated avenue, and then they maintain their wealth by diversifying, right? And so for me, I had created passive income through a concentrated effort, a concentrated strategy. So I was like, well, if I keep doing that, I'm going to keep having more and more of this, which, like, that's good, but I'm going to have to figure this out at some point in time, and kind of diversify and make a well-rounded portfolio. So if you look at the wealthiest people in the world, and I read these stats and dig into these numbers all the time, check family offices and billionaires and centimillionaires, what are they doing with their wealth? Most of them are not concentrated in one single area. It is spread out amongst many areas. And it's funny because most people in the world think that the majority of people make their money in the stock market, when the simple truth is that most people don't make their money in the stock market. They
mm.
make it somewhere else, and then the wealthiest people put about 25% of it in the stock market. They put another 25% in real estate, another 25% in private equity, and another 25% in everything else, from cash equivalent, fixed income, you know, we call it commodities, agriculture, maybe some cryptocurrency, right? But that's it, right? So it's kind of like those, private credit. I mean, all those things kind of make it up. And so I knew that I needed to allocate differently to protect our portfolio. And
Mm.
that's really where I got into the world of alternative investing, that I need to get good at private credit. That this should probably be, 5 to 15% of my portfolio. I really need to get good at other real estate other than mobile home parks. And maybe some is longer term while some is shorter term, and some cash flows and some doesn't. I really need to get good at private equity and venture capital. I really need to get good at, um, even some of the nuances of, like, your liquid cash, your cash
Mm.
equivalent, and how, what does that look like and what percentage? Because for most people, they've got 90 to 100% of their net worth tied up in the stock market. And that's an over concentration, in my opinion. I mean, we've seen this not work for a lot of people. And last year, the touted safest allocation, being a 60-40 split between stocks and bonds, was the top three worst performing in the
Mm.
last 100 years. So it's like, things are changing, times are changing. We can't put all our eggs in the same basket. We need to diversify and have a little bit of a few different areas, to make sure that in all seasons we have things performing, all economic seasons, right? Not just seasons of life, seasons of the year, but all economic seasons. We should have some uncorrelated assets. So when some things aren't performing, other things are performing.
I love how you are learning about all these different kinds of assets, right? Because understanding a wider swath helps you know when to go down one path, when to go down another, maybe how to take a lesson learned from this area and apply it to a different area. It gives you such a powerful baseline to be a more effective investor. I want to take it back a step though. How does somebody go from 0 to 1, right? Not having invested into their first investment. Maybe walk us through your story and maybe a little bit what you recommend for people today taking that very first step.
Well, for me, it's easiest and most comfortable to talk about what it's like, just following the plan that I did, which is I got
Yeah.
into some real estate that I bought an asset, and this, in my case specifically, a mobile home park that had many units, which I like larger portfolios because if someone defaults or someone's default, you still have most that aren't defaulting, so you don't feel the pain of a default versus investing in a single asset where when there's a default it means that no money's coming in, which means that
Mm.
it's negative cash flow. So I think most real estate, especially cash flowing real estate, can be great. And I have had a lot of success with mobile home parks, self storage, industrial. I mean, those are your three best performing, over the last 5 years, probably more than 5 years, but at least the last 5 years. So I like all those. Those are all great. But I mean, I've also been able to do it with small businesses before where we buy a business, we help scale it, we get a good price on it, and then whether you keep it. And by the way, I only do this if I have operators, right? I'm not
Mm.
trying to buy myself a job, but if there is compensation already in place in that business for the operator, then that's a business that I'm interested in. And if I have the operator, I won't buy it without the operator first. But that has served me really well. And I think that's another path that people can take. So for me, what's most familiar is what I did, right? Buying real estate, creating the passive income, and then from there, kind of delving into some other things. But I could have easily done it with a business first. There's just more risk in business, but there's also more upside in business. So it kind of depends. And I've done the startup life. I know how hard that is. I don't ever want to go back to startup again. I like buying things that are established, whether it be businesses or real estate.
So if you have a new person who kind of hears the lifestyle they've created for themselves, really excited to like take a step, you recommend investing in the world of real estate. Is there is there places they should go? Are there people they should talk to? How do they learn more about this? And maybe too, like how do they get comfortable with it? Because here they've created this little nest egg. It's terrifying to put that into some kind of investment that you think could lose everything. You think it might be really risky, but maybe not.
Yeah, so a lot of this it comes down to mindset. For me, I had this experience where I learned the hard way that Wall Street was manipulating the performance
Mm.
of my portfolio to make it seem like I was making more than I was actually making. So to me, it was actually riskier just leaving all my assets in the stock market, because then everything would ebb and flow based on how the market was. And so even though my statement said that I have had a positive average rate of return, I learned that the word average was an important part of the communication, because my actual return had lost me money, but somehow they were able to communicate on my statements that my average was positive. And so that distortion was like a sucker punch to the gut.
Mm.
And so I just learned real fast, wow, a lot of people think it's safer to just, outsource their financial life to someone else, to a financial planner, to a stock market. But 95 to 96% of money managers cannot outperform, in the last 15 years, did not outperform the S&P 500 index. And the 15 years before that, it was the same. 96% did not outperform it. And the ones that did, the 15 years prior, didn't the next 15 years, right? So basically, the odds of hiring a money manager to actually outperform are not good, yet you pay them more money. So there's more risk. You pay them more money than if you had just gone and bought some indexes yourself. And so that was just baffling to me. And then I also learned that the wealthiest people in the world have over half of their net worth in private equity and real estate. And that was incredibly eye-opening for me. I had no idea. And so I knew I had to make a pivot, and I knew that that was the direction I was going to go. And really, I have no issues with people wanting a portion of their assets in the stock market. I mean, people need to make the decision that's best for them. But I want to model after the wealthiest people. And right now, if you look at all the stats of what's going on right now, 2022 numbers, 2023 numbers, the wealthiest people in the US specifically have anywhere from 15 to 30% of their investable assets in the stock market. That's it.
It's amazing how financial advisors are really incentivized, not in the same way that they should be, right? They still make money even if you're losing money, and they
That's
create
right.
these crazy metrics, like you mentioned, the average rate of return, that are frankly lies. They're kind of games that people play to make you think it looks better than it really is. It's terrible. And if people take their own initiative to learn, grow, and apply their dollars directly into better resources, like, you can do so much better. I know you've written a book. Tell us more about this book.
Well, the book's called The Lifestyle Investor, and the subtitle is The 10 Commandments of Cashflow Investing for Passive Income and Financial Freedom. And it's really my 10 criteria for making investments. And so this is a book that, at some point I had always said I wanted to write a book. I didn't know what it would be about. I remember writing down in 2006, I did this dreams list exercise where I had to come up with 100 dreams. And one of my dreams was to write a book. And at that point in time, I didn't know what that book was going to be on.
Mm.
But I had had friends for years say, you've got to write a book on what you're doing with investing. Like, I want to read it. Your friends want to read it. Like, just write it. And I had friends over and over and over kind of giving me a hard time on this. But I wasn't motivated yet. I didn't consider myself an author. I wasn't sure if I was ready for that yet. And I remember I was walking with a friend around Town Lake here in Austin, and which is just this beautiful trail around the Colorado River. And it's just, to me, a very inspiring place to be. I love just walking and talking and thinking. And my friend said, hey, we've been asking you for years to write this. You're not writing it. So I have an important question for you. How are you going to feel if you die and your daughter never learns all these things that you've figured out when it comes to making money? And that was like such a rough question. I mean, I was like, wow, you're really pulling out the big guns, but that's probably what he needed to do for me to take action. Like, the pain of that thought caused me to start writing the book the next day. And so I literally busted out my phone. I just started recording myself talk. And that was really the beginning of it. So, this book started out as like my 10 commandments or criteria for my daughter when, she's, of age or old enough to be able to understand how to invest. And it continued to morph into something that was more and more comprehensive. And as I would interview my coaching clients over the years, and I would interview people, in my mastermind, things that they've learned, more just kind of kept growing into this book. And so, yeah, I'm proud to say it's, became a #1 Wall Street Journal best-selling book, which I would have had no clue, a USA Today bestseller. It was #1 of all nonfiction books on Amazon the week it came out. And I'm proud to say I even beat out Obama in one category since our books launched at the same time, which is really cool. But I guess the thing I'm most proud of with the book is from day one, I said that all the proceeds of The Lifestyle Investor, this book, are all going to go to charity, specifically fighting human trafficking. That's like the thing that weighs heaviest on my heart, having a daughter especially. And so now The Lifestyle Investor is a top 1% of books ever sold. And so it's allowed for us to donate hundreds of thousands of dollars on, behalf of these different organizations like the Tim Tebow Foundation and Love Justice International and these different groups that do such great work around the world fighting human trafficking.
That's incredible. What's also worth noting is I think the world of authorship nowadays has gotten really crowded. There's a lot of people that, hey, I'm an author. Hey, look at me. I'm great. And then they say things like, yeah, I'm a bestseller. But even that world, people play games to make it sound like their book is bigger and more valuable and more useful than it really is, where you actually have gotten real credentials, right? Wall Street Journal bestseller is a real, actual credential. So congratulations on making that a reality. Now, for that book, you've got 10 commandments, and we don't have time to get into all of them. You should read the book. But tell me, of those 10 commandments, which one's the most important to you?
Well, that is a hard question. Which is most important? I mean, I lead with the first commandment being lifestyle first, because my goal is that these commandments really help people to be intentional with living an epic life. And to everyone, everyone's life is a little bit different. Like what you want is different than what I want, and what inspires us is going to be different. There may be some overlap, there may be some similarities, but until we take the time and the space to carve off to really be intentional and proactive, we're just going to be reactive. And so I like this idea of getting clarity on what it is that you want your life to be, and then utilize this book and utilize assets to support that life. And it's amazing what that can do. I mean, the book's not called The Investor's Lifestyle, right? It's called The Lifestyle Investor. I want it to be lifestyle first, and I want the investments to be a catalyst to living a great life.
Yeah, it's so important. One thing that I've seen a lot of people do is they talk about, hey, here's kind of what I want. Here's what I'm thinking about for the future. But then they don't really think it through, and they don't come up with the action steps they need to do in order to reach that goal. Well, basically what you're saying here is make sure you define that well, but then actually take the steps. And if you do that, pretty much any goal you set before yourself, you can eventually achieve if you're thoughtful, if you're tenacious, if you're hungry, if you learn from others and how to achieve that and be intentional rather than reactionary. That's so important. As we're getting close to wrapping up here, I wanted to hear a little bit of what's going through your mind in today's markets, right? You wrote the book a number of years, or just a few years ago. What sorts of investments, what sorts of things are you looking at today that maybe other investors should be interested in?
Well, one thing, it's interesting because what I can do is, I can almost make a case why every commandment is the most important commandment. But what I will say is, my second commandment of de-risking the deal, that one's really important because in today's economy, we're seeing a lot more things fail than what we did the last 10 years, which was super frothy and everything seemed to work out. So there's bad habits, there's people that think they're better than they really are. And so I think that we need to be better about protecting the downside risk. But at the same time, the third commandment is finding invisible deals. And that to me is like, pay attention to the trends, pay attention to the economy, pay attention to things that are not on the market or things that are not for sale that you might still be able to buy. One of the greatest trends out there right now that I'm paying attention to, I think most people should pay attention to, is based on the greatest wealth transfer that is about to happen. The greatest wealth transfer in human history, mind you. Experts approximate that somewhere between $76 trillion and $106 trillion is going to transfer hands from baby boomers to millennials in the next 15 years. And by the way, not just in 15 years, like over the next 15 years. To give perspective to that, the second most affluent nation in the world is China at 75 trillion. So we're talking about a wealth transfer greater than the second largest economy and net worth GDP country in the world, and that is going to happen. So my big question is, what do millennials like to spend their money on and spend their
Mm.
time doing? What do they value? What is important to them? Because the next wave, the next iteration is going to be that, so like when I think about like trends and stuff, I've for years looked at, like, when I got into mobile home parks, everyone thought I was crazy. I mean, my friends thought I was straight up crazy. But now, if you're in mobile home parks, it's really cool because Wall Street's doing it, right? Private equity is all over this space. And it's the least institutionalized real estate asset class there is. It's still about 90% mom and pop owned, so non-institutional. Whereas apartments, for example, are flip-flop. They're 90% institutionally owned. Same with self-storage. Same with, I mean, you could go on and on and on. Early on when I started investing in e-commerce, people thought I was crazy. Like, no one's going to buy clothing online. You have to try it on. No one's buying shoes online. You have to try it. And I'm like, no, e-commerce is the way of the future. And so I got in on that early. When people thought I was crazy for investing in cannabis companies early on. And that has proven to be, some good investments. Everyone's talking about AI today and the importance of AI. And this is the new hot button. I've been invested in AI for like 7 to 10 years, so yeah, by the way, I do believe this is a great opportunity. And I think a ton of companies are going to fail, but you're going to see some of the largest returns and some of the biggest companies out there in this space, because this is the wave of the future. So what else can you find before it is mainstream? And paying attention to the millennials and who's going to have the money is probably one of the best indicators of that. And then the transfer of those assets from the baby boomers. So think about how many businesses, how much real estate, how many other types of assets are going to be sold over the next 15 years. This is a great opportunity to be an investor and to be an entrepreneur. And we just need to continue educating ourselves. So though we've had a soft landing so far, it may get more turbulent. It may not. I think the mindset needs to be, this is a great time. Let's search for deals. Let's look for trends, because I do think this is an incredible season to be in the business place, the business space in general.
Is there any tips you would give investors into how to understand the market and see those opportunities before others do?
I mean, it's probably just getting into the game.
Yeah.
It's meeting people that are in this space so that you can have intelligent conversations from experts, not people that, pretend to be experts. We're not talking about talking heads. I don't care what the talking heads say. And in fact, a lot of these talking heads have, inverse, ETFs, or portfolios that basically track the opposite of what the talking heads say, and they outperform because the talking heads are wrong that much. So it's about finding the experts that are best in class, world class in the things that they do, and learning what they're doing, getting in community with them, hiring them, finding them as coaches and mentors. It's about reading, listening to podcasts. I mean, it's about educating yourself on the new way of doing things. I mean, blockchain is another great example. And I feel, I didn't get in as early as other people, into Bitcoin and into blockchain, but I still got in pretty early compared to most people. But I think that's going to revolutionize the world. There's so many things that are, I mean, technology, like our technology is doubling at light speed right now. It's nuts. And maybe one of the better places to become more well-versed is in technology, because these are the concepts, the programs, the protocols that are going to, run the business world.
As you look back throughout your life and also kind of where you're hoping to head, how do you think you're going to have the greatest positive impact on the world over time?
Well, for me, I feel like I'm an educator first.
Mm.
I'm an investor, an entrepreneur second. I love entrepreneurship and I love investing. But even more than that, I love to teach people the things that I've done. And by the way, both sides of the equation. Like, here's what I've done well, and here's where I've really messed up. And I'm super open about mistakes that I make because I want people to learn from them. I want it to be worth something. And by the way, it was worth something for me because I'm a better investor. I'm a better entrepreneur because of these mistakes. But I want other people to learn them and not have to go through the same hardship that I've gone through. And I wrote about one of my stories in my book where I invested in a Ponzi scheme and got taken for about $1 million, and that was a painful experience. That's a lot of money, and it was in the moment like just unbearable. But now one of the smartest, it's one of the best things that ever happened to me because it's one of the single moments that made me smarter than almost any other single moment. And I
Mm.
totally changed my approach because of that experience. So yeah, I think it's important that we're always learning. And I think for me, the greatest impact I can have is teaching people that there are other ways to think about money. There are other ways to think about building wealth. There are other ways to, go about doing things where you don't have to be a slave to the business that you've built. You don't have to be a slave to the money that you make or the lifestyle that you become accustomed to or the boss that you have or the job that you can't stand or a slave to routine or safety and security or whatever it is. Like that, my goal is that I can help educate people that they can buy their time back and spend their hours with people that they're most passionate about and on topics and studies that are most life-giving to them.
That's excellent. If people want to learn more from you, want to gain that education from you, how can they find you?
So the best place is just to go to lifestyleinvestor.com. We have all kinds of resources. We have all kinds of free stuff from, a blog to a podcast. There's the book. We have courses. There's an online course. There's a mobile home park masterclass, a passive income masterclass. We've got a mastermind that's a community of some very successful entrepreneurs and business professionals that have done very well in life. And for someone that doesn't know what is kind of like the next step for them, Mike, something that we just started doing that I'm happy to share with you and your
Yeah.
community is we started doing these free strategy sessions to kind of give people next steps. So if anyone in your community is interested, they could go to lifestyleinvestor.com/strategy. And someone on our team can meet with them for free and just kind of, share some resources that we have and maybe next steps that they could take.
Wow, that's a pretty incredible resource. If you're at a point in your life where you want to have that kind of lifestyle, why not get advice directly for your situation to help you through that? That's amazing. Well, Justin, I so appreciate you being with me today on this podcast. Incredible life experience that you've had and the impact that you made through that. It was just great having you here.
Well, thanks, Mike. I appreciate being here, and I just want to honor you by saying you do such great prep work for your
Mm.
podcasts. I'm impressed that you made the decision to read the book prior to us interviewing, so that you could, have that as kind of a backdrop for what we're going to talk about. But you've also asked me questions that no one else has asked. I mean, I've probably been on 300 podcasts, and you asked me a series of questions no one's ever asked me. So I just want to honor you in front of your audience that you really do a great job. And I hope that your community knows how awesome you are and how seriously you take your, I don't even want to call it a job, your passion project of podcasting.
I really appreciate it, Justin. That does mean a lot. So thank you so much. And thanks for being here.